Welcome back to V2U Research. I'm your host, bringing you the Australian Daily Stock Market Wrap for Thursday, April 16th, 2026. The S&P ASX 200 index closed the session at 8,950 cars, marking a decline of 23.70 points, or 0.26%. Over the last 5 trading days, we've seen the index remain virtually unchanged, showing a period of consolidation. Currently, the index is sitting 2.69% below its 52-week high, as investors weigh recent economic signals. Global sentiment was influenced by comments from President Trump, stating the war with Iran was close to over. However, Washington's ongoing port blockade keeps supply disruption risks elevated for global trade. Turning to the technicals, the ASX 200 continues to hold above the key support zone near 8,383.2. The earlier near-term resistance is located around 8,940.3, a critical level for bullish market participants to watch. The RSI, 14, is currently at approximately 60.59, which suggests that bullish momentum is still in play. We are closely monitoring the current trading range defined by these key technical levels. Sentiment soured today after April data showed Australian inflation expectations jumped to their highest since late 2022. This spike has stoked significant concerns regarding persistent cost pressures throughout the economy. Further dampening the mood, employment growth slowed to a 4-month low in March. This slowdown was primarily driven by a significant drop in part-time positions across the country. Sector performance was mixed today, with 6 of the 11 sectors ending higher despite the broader index decline. Information technology led the charge, soaring 7.40% today and nearly 10% over the past 5 days. A-REITs also found favor with investors, gaining 1.84% as the second best performing sector. Telecommunication Services followed closely, ending the session up by 1.14%. On the downside, financials were the worst performers, correcting 1.28% during the session. Energy and materials also faced headwinds, falling 0.56% and 0.41% respectively. In the individual stock spotlight, we saw some impressive gains from the technology leaders. Life360 Inc. was a standout performer, jumping an impressive 12.45%. WiseTech Global Limited wasn't far behind, rising 12.36% on strong sector momentum. Conversely, Reese Limited and Newmont Corporation struggled, falling over 5% each. Looking ahead, market participants are shifting their focus to the U.S. initial jobless claims data. This data will provide crucial insights into labor market trends and overall economic health. If you found this ASX wrap useful, please like the video and subscribe to V2U Research. Turn on notifications for regular updates, insights, and educational market content. Share your stock watch list in the comments. We want to know which ASX stocks you're tracking. Trade responsibly and manage your risk. We'll see you in the next market update. Let's dive deeper into those inflation numbers. The jump to 2022 highs is a significant signal for the RBA. This complicates the path for future interest rate decisions as the central bank balances growth and prices. The tech surge wasn't just limited to the top 2. Broader software services saw consistent buying. Investors seem to be rotating back into growth as digital transformation continues to drive earnings. A-REITs showed remarkable resilience today, potentially benefiting from a slight cooling in bond yields. Despite hybrid work trends, premium commercial assets are holding their valuation ground. The 1.28% dip in financials reflects concerns over net interest margins in a shifting rate environment. The Big Four banks faced selling pressure as dividend yields were reevaluated by institutional players. Materials were dragged down by softer demand signals from our major trading partners in Asia. The volatility in iron ore prices continues to dictate the short-term direction for our mining giants. Reese Limited's over 5% drop was a point of interest for many technical traders today. Their performance is often seen as a bellwether for the health of the Australian construction sector. Newmont's decline came despite relatively stable gold prices, suggesting company-specific profit-taking. Safe haven demand remains high globally, but mining costs are an ongoing challenge for producers. Let's circle back to that 8,383 support zone. It has held firm through several volatility spikes. Maintaining this level is crucial for investor confidence and the overall bullish structural thesis. Despite the headline index drop, market breadth was surprisingly balanced across mid-cap stocks. This suggests that while the large caps struggled, there's still underlying appetite for growth. In volatile markets like this, managing your risk through proper position sizing is essential. At V2U Research, we are committed to providing you with the educational tools to trade smarter. To summarize, the interplay between Australian inflation and global geopolitical risks is the key theme. Keep your watch list tight and your eyes on those technical resistance levels we discussed. Stay disciplined, stay informed, and let's navigate these markets together. V2U Research, your partner in stock market advisory and financial insight. Don't forget to follow us on social media for real-time market updates throughout the day. Financial advice provided is general in nature. Please consult with a professional advisor before trading. Taking a broader look, global interest rate trends remain the primary driver for institutional capital flows. The volatility in the 10-year Treasury yields is creating ripple effects across the Australian equity landscape. In the energy sector, we're seeing a structural shift as companies balance traditional production with renewables. Stability in global supply chains will be key for these stocks to regain their upward momentum. For the materials sector, watch for the upcoming quarterly production reports from our mining majors. Operational efficiency and technological innovation are becoming the main competitive advantages in this space. Don't ignore the small caps. We're identifying several emerging players with strong fundamental tailwinds. Sectors like health tech and renewable energy storage are showing significant early-stage growth potential. Strategic diversification remains your best defense against the headline risks we've discussed today. Whether you're a day trader or a long-term investor, align your time frame with your risk tolerance. For those seeking more personalized guidance, V2U Premium offers deep dive reports and direct analyst access. Our community is growing every day, helping traders across Australia make more informed financial decisions. One last look at those levels: 8,983 support and 8,240 resistance. Mark them on your charts.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.